sobre la economía de Estados Unidos, sobre el dólar, si está desplomándose o no, y sobre las decisiones de los bancos centrales vamos a hablar en los próximos minutos, y para ello tenemos a Arnaud Mounier, jefe de Desarrollo de Negocios de Renta Fija en AllianceBernstein. Hi Arnaud, thanks for being with us in Negocios TV. It's a pleasure having you here.
Thank you for having me.
We are talking about the US. Let's start with the US economy. What is your take for this year?
Sure. So look, 2025 US growth was surprisingly resilient, given all the headlines and the volatility on US government policies. The AI-related spending did boost growth quite a lot, and for all the noise around tariff, it did not weigh on growth or inflation that much. So for 2026, we do expect that the same fundamentals will be supportive of growth and will remain valid. And so we are forecasting a real GDP around 2%. Inflation in the US is higher than the Fed target, higher than 2%, and it should remain higher than 2% in 2026. But we think it's still going to be enough under control that the Fed can cut interest rate in 2026. Our forecast at AllianceBernstein is for US Fed to cut rates 3 or 4 times to support employment, which is really the part of the market which is weakening in the US economy, weaker job market that the Fed needs to monitor.
What about the USD? It lost almost 15% the last year. Do you expect more depreciation to boost bank, sobre todo about the euro? Do you expect more force to the USD?
No, we don't think we will see the same type of depreciation in 2026. If you look on one hand, the US dollar is still fairly expensive versus other currencies in the world, especially in developed markets. You have to remember we've been through a 15-year cycle of appreciation of the US dollar versus most currencies. And so a correction over 1 year is not enough to offset all of that appreciation. You also have the prospect of lower interest rate in the US versus interest rates that are going to be more stable in Europe or in Japan. So the interest rate differential would justify a lower US dollar as well. But on the other hand, what we are seeing is US exceptionalism well alive, with strong flows into US equities, with more exciting growth prospect in the US versus Europe or even Japan. And so for all of that reason, that's a bit more supportive to US dollar. So you have two, I would say, balancing effects, so that overall our US dollar positioning is to be fairly neutral in 2026.
Now we want to talk about the central banks switching to Europe. What can we expect from the ECB in the economic context?
Well, the economy in Europe is it's difficult to paint it with a single stroke. Obviously, Spain or Ireland are outperforming a lot of other European countries, but we are seeing a number of countries that are underperforming. We do expect a positive impact to growth in Europe from fiscal expansion in Germany, but it remains to be seen how and when this fiscal stimulus is going to be deployed by the German government. We have to remember that the manufacturing sector in Germany is under a lot of pressure from high energy costs, pressure from the competition from China. So it remains to be seen whether this fiscal stimulus is going to be enough to counter those headwinds to growth. The good news in Europe is that inflation is at ECB target, close to 2%, and it is expected to drift even slightly lower than 2% in 2026. So if the ECB needs to cut rate to boost growth, they have room to do so. But overall, our best case scenario is for the ECB to cut rates only once in 2026.
And Arnaud, the last question, based on these macroeconomic views, what are your recommendations for fixed income in this year?
That's right. Okay, so we do recommend investors to add exposure to interest rate, what we call duration in the fixed income world, by investing in bonds with longer maturities than probably they have at the moment. When I say longer maturities, probably around 7-year maturities, even 10-year maturities. The idea is that we have a lot of investors who are still allocating a lot of money to cash deposits, and we think they should increase the duration of their portfolio, especially in a context for US dollar investment where the cash deposit rates are going to go down when the Fed is cutting rates in 2026. If we face another risk-off environment, market environment like we have faced in 2025 in April when there was a lot of discussion around tariff, at least this duration exposure should offer a welcome boost to portfolios and protect clients' portfolios. The other recommendation is on the credit side. We get a lot of questions from clients about, is it too expensive to buy credit assets at the moment? The risk premium are expensive by historical standard. And we would agree with that, but we would recommend clients to focus on the absolute yield level that they get on those credit assets. They remain quite attractive, even adjusted for inflation. And overall, what we can expect is another volatile year, given the geopolitical backdrop. So our best recommendation with credit assets is to stay flexible and dynamic. There will be opportunities down the road to invest at better levels.
Well, waiting for the central banks, waiting for more info about this year. Thanks for being with us, Arnaud. Thanks for being with us in Negocios TV. It's a pleasure. Have you here. Thank you so much.
My pleasure. Thank you.
Thank you, Arnaud.